additional $2.4 billion. That is on top of $1 billion it raised just last week. So total, in just a few days since last Thursday, Robinhood has brought in $3.4 billion from existing investors. So the names on this list, in terms of the backers giving Robinhood some capital here: Ribbit Capital, Iconic, Andreessen Horowitz, Sequoia, Index Ventures, and NEA. All again from existing investors here. And it's in addition to $600 million in credit that they got from their bankers last week. So all of this, of course, to meet those record capital requirements in order to keep these stocks online. And again, $3.4 billion just since last Thursday.
So guys, look like Robinhood is in the news again. This time it's for raising capital. Why do they have to raise so much capital? That has a lot to do with the phenomenon GameStop is doing right now. Robinhood had to raise enough capital to keep that stock online for people to trade. They even limit the amount of stock you can buy in a day, down to 5 and now down to 1 per day. You can sell as many as you want, but buying it have a restriction on it. So let's start by talking about what GameStop is doing. Remember, before I started, this has nothing to do with GameStop. At the end of the day, they're still struggling as a company. This has a lot to do with our new generation and speculation. So let's talk about that. Another episode of ISO, we are here to discuss the phenomenon that is GameStop going on right now. As we all know, GameStop is a traditional store where you can buy or trade in your video games. I'm surprised that it's been in business this long, because you can buy a game anywhere. Walmart, Best Buy, and some of this new console like PS5 doesn't even play with CD. You can just download games over the internet. So that's normal to think that this kind of store may be in trouble. So why the heck is their stock going up so high and create all this hype about it? So it started with a guy on Reddit. He noticed a few months ago that a lot of big investment firm is shorting their stock on GameStop. So a quick lesson here. Shorting a stock means you betting for the stock to go down, and you will buy it at a lower price point, and whatever the difference is, that's your profit. So they're betting on GameStop stock to go down. And so what he's doing, he's starting a thread on Reddit and betting on it, and have a lot of people start buying into GameStop, which make the stock going sky high. So the price can start at I believe it was $3-4 at one point, and in a couple of weeks he got it going all the way past $400 in a short period of time frame. Even Elon Musk, he can actually move a person with influence that actually can move the market with his tweet. I think he tweets something like GameStop. Stonk is like a slang word for stock. So everybody goes over GameStop. They buy more and more of the stock, driving the price go all the way past $400 at one point. And this has nothing to do with the value of GameStop. This has a lot to do with the social media age that we're in. So this is a dangerous thing, because a lot of people get onto this hype, and you really don't want to be playing with this musical chair when the music runs out and you're the one stuck standing with no chair and all the stocks, and it's gonna crash and everybody already sells out and you're the only one stuck with a whole bunch of stock. So for example, today when I checked, the stock is going down to $225 at this point. And remember, this stock was at $3 at one point. So this, once again, has nothing to do with the fundamental of investing. There's no value here that actually makes sense in any kind of books that you're reading about investment. It's solely based on speculation and emotion, which should not be how you invest. Your investment should be on the business model of the business, the long-term time plan that they have, the revenue moving into all those things. And none of it has anything to do with GameStop right now. So it's about the little guy can take control of the market, can drive the price all the way up, and forcing the big company, the big investment firm, in this case it would be Marvin Capital, who is taking a undisclosed amount of loss. They bit a bullet and sold their short position. That means some people think, oh, the smaller guy win. Yeah, in some way they did win, but remember, there's a balance in the market. Remember when you run into the store and try that buy that last toilet paper, the next guy was not kind to you. So when they go to the end, when you need toilet paper, people will fight over that. So remember that there's a balance in this world with the big and the little guys. But a lot of people are chalking up to be, it's a big win for the little guys. But remember, you invest something is invest in the financial education, not speculation. And if you were taking part in it, please tell me below in the comments how much money you make, whether or not you're still in or you sold it out. So what the little guy was doing to the big guy is called short squeeze, because they're squeezing that short and make it impossible for the big guy to make any money. So the big guy sold out and lost their money. So two things we learned out of this is shorting of the stocks and the short squeeze of that shorting. So all this was creating, and it's still going on today. A lot of people on a big market already tells you to sell your GameStop stocks, but a lot of people hold on to it. And the initial guy on Reddit, he invested about $55,000, and its value up today about, I think, over $55 million. So Uncle Sam will have a good payday too. But the idea here is know your market. Really understand what you're investing in. Don't just go with hype, and do your own homework. So that's a quick idea, a quick explanation of what happened with GameStop. Thanks a lot for watching, guys. Please give me a like and subscribe to the channel. See you guys on the next one.